The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. As always, between this time and the end of this hour, we come together.
The following takes place between 2 p.m. and 3 p.m.
Yes, it does. Eastern time, of course. We're going into a long weekend. Of course, tomorrow will be the last day of trading this week. We're off on Friday, so we'll have a nice long weekend to bask in the 80-degree temperature of Florida and have a nice weekend at the beach and kind of get my head clear. I'm kind of unfortunately, I watched the news today, and there wasn't anything that didn't raise my blood pressure, at least a couple of points. But I will try to push that to the back and soldier through the rest of the day. It is probably going to be a quiet day tomorrow also. I suspect maybe we pull back even a little bit farther. We could probably get down to 2025 on the S&P cash. We're off 6 points now. I think maybe we close somewhere around 10 points off the S&P today, maybe another 15 points tomorrow. And if you are bullish so far, probably not bad signals. Normally after a 3-day weekend, if you go down into it, then you start moving back up the next one. So probably if you are and do want to be bullish, you want to see this market pull back with light volume into tomorrow's close. If you are bearish, you would like this thing to probably pop up 10 points and have, I don't know, we're starting off now with this 2.2 billion shares. We'll say that we start the day tomorrow or start the show with like about 1.8 billion shares tomorrow and the market's up 10 points. That would be bearish and a little counterintuitive, but whatever the weak side is normally into these 3-day weekends reveals itself into them. And so we'll continue to keep an eye on the volume today and the movement through tomorrow. It is going to be probably light and variable trading, not a lot moving when the S&P can't move more than 6 points. But we have other things to fill the show today that will illuminate you. And part of that is history, and this is a big day in financial history.
And it's all just a little bit of history repeating.
On this day in 1720, the South Sea Bill, not to be confused with the South Seas Bill, which there isn't any, there is probably the single, even to this day, the single biggest divergence into financial euphoria and dementia ever in financial history. What was this all about? It takes quite a long time to explain it all. I'll try to get it into this segment. But for any trader, I think understanding this period of economics will illuminate you to maybe even what we're going through today, and I'll try to tie the two together. But it's about 1707, 1705. England has been, and I said England, not the United Kingdom, because I think the United Kingdom came together in 1710. But the British had been at war for almost 100 years. They had a huge and crushing debt. No one actually knew what that debt was because every single different part of the government had its own budget, and almost all of those budgets weren't worth the paper they were printed on. No one knew how much the debt was. There was one gentleman that actually came up with a wild guess that probably was about 50% too low after going through a lot of them. But into the movement, crushing debt. And of course, the answer for crushing debt is to spend more money. We've learned that here in the last 10 or 15 years. Don't get your house in order. Just throw more cash at the problem, and that's what the British actually did. Scotland became a part of the British, I think in 1707 or 1710, somewhere around there, and they became the UK. Anyway, in 1720, we saw the culmination of about 10 years of fiscal shenanigans. Those shenanigans started in about 1708 with a lottery program to help out the debt in the United Kingdom. And it progressed from there. Basically, a gentleman came up with a way of running a lottery where at least even if you lost the lottery, you would get 10% back of what you put in it, but you'd have to wait about 10 years. And the way that this all sets up starts to make sense. They continued to run a Ponzi game with various things. Part of this Ponzi game was a new company called the South Sea Corporation. And basically what this was, even from the beginning, was a giant scam. That scam was that all these ports in South America through Mexico would be open to the British. Of course, to that point, the Spanish controlled all of that territory. And this is kind of the down leg of gold. And Spain's not really too interested in what's going on over there anymore because they basically have looted as much gold as they pretty much can. What gold they didn't get is probably still lying on the ocean floor in some spots. But of course, the Spanish were in no mood to give the British those ports and let them start trading with them. So, of course, this company was all about trading with the Spanish shores of South America and Mexico, where they had no rights to go to begin with. So let's just call it what it was, a giant scam, also perpetrated by the guy that actually started the lottery for trying to bring any cash they could in instead of realizing that they had crushing debts and take care of it. Much like today, they had a very separated parties. The Whigs and the Tories still have the Whigs and the Tories. But nobody was going to give an inch on either side. Basically, they had gridlock. Well, one of the strange things of the British Parliament is that no one was elected, of course, at that time. And I guess it's only slightly better now. And, of course, they have some of the worst free speech laws in Western democracies still. I would not want to live in a good place to visit, but a horrible place for individual rights still to this day. Anyway, the Brits, what do they do? The king? Well, you know, if you want to break a deadlock, you can appoint anybody you want as a lord, and suddenly they become in the House of Lords and can break whatever's going on. We're going to finish a little bit more of this because it is an enormous story that everybody should be well aware of because it has parallels to today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're going to get back into the story of the biggest journey into financial dementia that there's ever been. Anyway, of course, basically they just add a few more people to the House of Commons and break the deadlock. Now, what was this all about? This was about the Bank of England. And what they did was take the South Sea Company, actually took all the debts of England and they put it over in their little ledger. And suddenly, England wasn't in debt anymore. And of course, the king was happy. What did they start is giving away these shares of stock in the company. And to talk about a con man worthy of Madoff, they start these things off at about $20 or 20 pounds, excuse me. And they keep talking it up. And they hire new management for the company. And what does the management do? It gets involved in the slave trade. And they can't even make money at that. So the company's never, ever made any money. But there's so much graft going around in this scam with the stocks that it continues to go up to about 100 pounds. Well, it looks like everything's going to fall apart, so they come up with yet another scheme, and this scheme is to start to add leverage. That is, you don't even have to pay the par for it. All you have to do is put up 20, or actually at that first time it was put up 50%, and you can come back in 6 months. Then later on, as the stock went through 400, it was 2 months, but you only have to put up 20%. Eventually, they get the stock up to about 1,000 pounds, and one of the only guys that knew that this was let me put it this way, would say that it was a giant scam, had been thrown in the Tower of England. It had been in prison for about 4 or 5 years, continued to tell everybody that he could write to that it was a giant scam. So to basically nullify him, They let him out and said, here are a bunch of shares. Well, he knew it was a scam. So what does he do? He gets to $1,000 or £1,000, and he says it all. He sells every penny that he has. Well, interestingly enough, that is all it took. And 2 weeks later, from £1,000 down to £150, it blew apart. Of course, as I said, everybody was getting paid off. Everybody was getting rich. But there was one man who kept actually all a ledger of everybody that was getting paid off. He knew that if he stayed around, he wasn't long for this world. So he ran off to Brussels, Belgium, where there was no extradition treaty at the time. And the king wrote 2 letters, one privately to the people in charge in Belgium and one publicly. Give us our guy back right now. The other one was, here's £50,000. Do never let this guy out of your sight. Do not let him back to England. He's got the book that shows everywhere the money went. But when we kind of think about people like the FOMC and all the people that do it, the birth of the strong central bank, the bank that would lend money back to the country itself, this was it. This was the first attempt to go around a bank that had any kind of semblance of understanding what would happen. And since then, nobody's really tried any of these other giant scams other than the FOMC itself. It continues to throw money on the fire, tries to drive stocks up, doesn't like it when they go down. And why? To perpetuate the exact same thing that happened in the South Sea. Bill, I know one day the chickens will come home to roost on this, and I recommend everybody looking at it. There's a great video series on this. If you want the link to it on YouTube, it is kind of like a little cartoon, very comical, very entertaining. But if you want parallels in history to what's going on now, that is the inability to actually look at reality and understand what is going on and how the books are being gently roasted or completely burnt. A wonderful time in history to go back and look at it. And as many people said in the den, nothing ever changes. Other things going on here today. Oh, I forgot to say, guess who they hired as the ring man to perpetuate this whole thing as the chief propagandist? You'll never guess. It's the same guy that wrote Gulliver's Travel. He was always writing articles demeaning anybody that would say that this was a sham, but very interesting. The other probably most interesting thing about the whole fiasco is that the gentleman that ran all these scams, that came up with the lottery scam and then the stock scam, actually owned a blade company. He sold swords to the army, but his sword company was called the Hollow Sword Blade Company. But the best part was his name, and that was Blunt. He was Mr. Blunt of the Hollow Sword Company. I don't think I want to buy blades, sharp blades, from a man named Blunt, but that was interesting. Anyway, talk about revolting. 4 of the 17 members of the Federal Open Market Committee have now come out publicly since the last announcement from the FOMC with dovish guidance. Now we have a fairly significant amount of people saying that Janet Yellen should continue to raise rates. And I can only imagine that that number will increase as time goes along. There's enough out here, though, that I would not suspect that we are going to get anything like a plurality of votes in the coming meetings. And the next FOMC meetings may be a lot more raucous than the last one. In Brazil, if you've got anything down there, like maybe PBR or any of the other ones, It is really heating up. You should look at the political issues surrounding Brazil. The president, who's knee-deep in graft and corruption, said that she will never resign. She had committed no crime and would ever get involved in the political corruptions. But the evidence is overwhelming and damning. And of course, going into the Olympics this summer, the ability for a powder keg to go off right before or right after exists. Be very careful of what's going on there. It is heating up. Of course, we talked about Apple. Today's news is basically a continuation of I Told You Thusly from yesterday. Yes, they're going after the chips, as I said almost 3 weeks ago. The company is called Celebrite. They're an Israeli company, somewhat owned by a Japanese firm, which is weird. But that's exactly what they're going to do. I'll explain how, if you have physical possession of any device, how they can get the data off of it. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Oh, I forgot to also mention that that blow up in 1720, they are still paying that debt off 300 years later. You ever wonder why England continues to kind of head south? Anyway, we were talking about Celebrite. And again, I talked about when this came out a little bit yesterday, but a little clearer about what the feds are going to do. And that is they're going to copy all the data off the actual DRAM chips, the memory chips themselves. And of course, after 10 tries or 5 tries or whatever it is, it will erase itself. They will plug back on something like a chip whisperer, reprogram the memory chips exactly as they were, and try it another 5 times. As I said before, if the feds, the FBI, the CIA has physical possession of anything you own, if they want to, there is no way that they cannot get to, through a variety of methods, get to the data on that phone. And I said, basically, to the FBI.
You're telling me a big fat lie.
And they were. Other things going on, the sharing economy. Altamont Springs, which is a suburb of Orlando, I believe, is getting into the sharing economy. They have a little problem with the transportation. They don't want to build a bunch of bus systems and all that stuff. So they are subsidizing Uber and Lyft and some of those others. I don't know. I've always wondered whether they were worth $40 or $50 billion before they ever came public. Maybe this thing works a little bit better than I think. I'm still wary about the valuation, but kind of interesting that we are seeing companies that aren't even public now getting involved in what we'd call public transportation. I don't know if it's totally subsidized or not. Not a lot of details, but thought it was interesting. It is a mad market that is not that is so mad that it is only down 7 points in the S&P cash with 2.35 billion shares. So what else can we say about it other than that? Disney has decided to go out and viciously attack the state of Georgia. They would say that they are promoting rights, but I would say that they are threatening a state of the union with an economic boycott. I wonder if that is a smart idea for Georgia. Last year, Salesforce tried pretty much the exact same thing to the state of Indiana. You may be pro what the end game is for Disney or CRM, but again, we are seeing basically businesses getting into a lot of issues that don't really have anything to do with their bottom line. But my question is, especially in the Bible Rust Belt, if this is a particularly wise thing for Disney to do via their stock price. You can read more about it. Like I said, I was taking probably the side of what Disney said, and of course, of what Georgia probably thinks. But kind of probably a reason why we're seeing the volatility we are in our political system these days. When we look at Disney, of course, what is it off 44 cents? Not a lot of big movement here, but you never know when a big boycott of a company like Disney comes on after they've kind of riled a giant base of people, especially people that go to their church every weekend. What else do we have? Let's go ahead and look at some other stocks. Tests. I've been looking at some other ones out here, and one of them is the Centene Corporation. Been looking at some of these companies hit up against levels like confluence levels. CNC. It's up $2.61 at $62. This is a good example of how you set up your confluence levels, and that is as a stock comes up to that level, you probably do not want to be much longer than the top of that confluence level. That would have been $60.38 Past that, you're probably going to do what this did, which is pop up fairly low. Low of the day was 61.35. Normally this is fairly decent resistance. We've seen it tested 3 times. But if you are setting up confluence trades, I like them because they give you a very clear definition of when to get out. That would be above $60.38. Once it pulled back in that, you really don't want it going back and closing back above that level as it did yesterday. What else do we have? DIG. This was another one that looked fairly interesting. I think we talked about this, at least in the energy sector. It had a fairly decent confluence level of $34.27 to $35.24. So it's about $1. It's fairly wide, more of congestion. It looks to me like, well, let's get a quote on DIG here. Off 3.5% today, which is off $1. No big deal. $30.75. But certainly these areas, especially when you put confluence together with gaps, certainly start showing exactly where the tough resistance will come in. What do we have now for volume? About 200,000 shares. So not a huge volume day out here already, but basically if you bought this thing at the low and you were up $13 already, maybe you were getting a little piggy out here once you got up to this level of gap. The gap on the way down happened on the 7th of December last year. That was 476,000 shares. You got into it with 410,000 shares, so not all that bad. But at best, you got to pretty much figure this thing had done a significant retrace. You made, 50% on your money? I don't know. It just seems to me a little piggy on that if you weren't taking some cash up at that level. What else do we have out here? Honeywell was another one that we talked about yesterday. I want to see how that one is trading out here today. 112.40, and that's off 58 cents. This thing has been above it for a while. I did have kind of a sign of strength out here on this day of the 17th of March. Let's go back a little longer. What do we have? Let's go back 2 years. Probably the biggest thing is you did have a nice spike that got sold off, and that's probably what I was thinking of when I put this in my list. 15 million shares on the 22nd of February. This thing spiked up. It's now kind of up there. And again, off 61 cents, 1.3 million shares. Not too bad. I would have liked to seen a little bit more juice in the sign of strength as it went through that 107 high. Did so on 4.2 million shares on the 17th of March. We'll be back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back. Anyway, we're at Honeywell. Kind of tough to actually figure this out here. What you probably dislike is that you would have liked to have just a little bit more of a sign of strength on the 17th. 4.2 million, not bad. Certainly not that spike. But what you would probably like is to see this thing come back down to about 108, 109 on very light volume. Firm that this is an up move in Honeywell. We talked about Healthcare Trust of America, I think, also yesterday, and I'm just trying to catch up on how some of these stocks are doing. It's basically flat yet another day out here. But of course, looking at the volume, which is what? Where's the volume? 286,000 shares is what I'm showing right now. That's not what you want to see going up against a major high, which was that March 20th high at 29.14. It hasn't pierced it, but it's close. Certainly into those candles that had 1.9 million shares. The best you did was 1.6 million shares. We are certainly going sideways on incredibly light volume. I don't know if you can read a great deal into that until next Monday. I wouldn't be shorting it just yet. But a lot of these stocks hanging up here with very light volume, especially the last 3 to 5 days. And that would, if I was bullish, would have me sitting on the sidelines. If I was bearish, probably still sitting on the sidelines until next week. I can't imagine a lot happening till tomorrow. Jarden was another one that we talked about yesterday. I wanted to see if any movement in that. No, it's another 4-cent mover. But another one that's hanging up at these highs, $57.85. It's gone up against the December 16th high at 9.5 million shares. With 2 million shares so far today, we may even be lighter than that. And of course, tomorrow, what you wouldn't want to see is this thing going through 57.97 on some kind of 800,000 share a day. What else? There were a lot of other stocks moving I wanted to get to today. So let's go ahead and start taking a look at those. CTAS. Get into some new stocks out here. Cintas, we talked about this going into its gap. So far today, it is down $3. And you just, again, a lot of these stocks are turning at these gap levels, or at least finding resistance at them. Of course, you can give me a call at 877-927-6648. You can email me at path@tfnn.com. On the downside, on the 4th of January, this came down with 717,000 shares. Doesn't really look all that bad. Had a kind of decent sign of strength off the bottom, big candle, but didn't ever have the kind of volume that would make me jump up and down. You got to look at these gaps as probably likely areas to find resistance, at least temporarily. Of course, this is off almost 4% today at 86.77. That pretty much took you right back to a 382 in one day. What else do we have? Five actually had earnings on the upside. Let's take a quick look at this one. Five, the retailer, I think, close. And it's trading out at $42.03. That takes this one right back into its gap. That gap happened on the 9th of January, came down with 10 million shares. We're looking at five push through 3.5 million shares today. And even though it's up $3, man, you're smack dab into this huge gap down. That gap down, as I said, 10 million shares on the 9th. And I got to think that there are a ton of people from that November 28th high all the way into when this thing blew apart on the 9th that would like to get their cash back. Again, probably not a bad time to look at some of these. As always, we've talked about Packaging Corporation of America as one of the canary in the coal mine stocks. This has made its way back into a 382 retracement. Did I get it on this? Packaging Corporation, where is it? Did I get it in there? PKG. Hang on a second. PKG. What else do we have out here? Today it's off 43 cents at 58.55. Volume's coming in at just under 1 million shares. So, 50 cents off this move yesterday. Did hit the 382. Energy has been pretty good off the lows. And of course, you had a big volume day last week that really didn't go very far, which I find very quizzical. That was on the 18th, and it was a doji. Normally, dojis on the way up or the way down are a halfway move or the end of a move. Now, you may see this thing drift up like it did the next couple of days before you start seeing the move down. Doesn't always mean exactly the next day, although it does happen quite a lot. You did have a gap that this filled. That gap actually happened on the 25th of January, down with, we call it 3.8 million shares. That's what I dislike the most about this is volume yesterday, 2 days ago, 1.2 million shares. Yesterday, 1.15 million shares. And of course, as we look at this today, just about 1 million shares again. So not a lot of juice coming back into that gap and filling it over the last few days. What else do we have out here? Nike came out with earnings and dropped the chalupa. It is off, it was $2.38 at 62.53. Of course, it got down to 61.50. 61.55. Was that what is it? I'm losing the 61.15. So not such a big pullback. Energy on this last leg up was fairly good. Of course, this thing spiked out a couple of times. It's back up to its pullback level, and it's gone all the way through the 618 and pretty much at 382 up here. The 782 on the top. 781. Which one is it? I'm going to have to go back and look at those numbers. So anyway, volume coming in today is 21.4 million shares already. And you have to kind of keep an eye on that. I've got to check on a couple of things here. Just give me 1 second. Okay. I just have a position or two on, and I needed to look at them and see how they're going. Other stocks of interest moving out here today. While some of the 3D printing stocks have come off the bottom quite well and done well into earnings, X1 has probably not done that. It is off about 5% today at $12.25, off its recent high of $13.45. This is one of those kind of smaller micro cap ones. But you basically had volume going into earnings mostly on the back of DDD and SSYS as models for this. Both of those have come off fairly decently off the lows, but not so much for this. Back into the trading range. No soup for you. We'll look at this a little bit more when we come back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're looking at Dano from Clearwater. Asks, can you take a look at Laz? And this was a pretty good setup to go short. Laz is off $1.31 now at $38.58. I would probably wait now until it got. You're probably going to get a bounce on Monday, maybe. But I would like to get this thing short at Confluence, which is $40.03 to. What is that? Actually $40.93 to $41.81. That's also in the gap. You may not get it. I don't chase. I see that, if you had a lot of volume coming in today, what do we got? 300,000 shares that maybe you could, but I don't like chasing on on light volume back in. I would much rather set my stop or my short on Lazard probably at 50, or excuse me, 41.50, something like that, 41.25. I would kind of like to see it get into that range. You've got some big gaps that are going to be huge resistance. And as you watch it trade into those days, which is the 7th of January, 1.5 million shares, and the 6th, which was 800,000 shares, I suspect, you got right up to that first gap, which is that gap of the 7th. That was, what was the high of the day there? $40.55. You pierced it. That was the signal probably to pull the trigger. Again, I hate going into short weeks on this. You may still get that 40.70 or 41 area on Monday or Tuesday. As I said, market's kind of quiet. Volume is light. We're off 13 points, which is 2.5 billion shares so far. I would like to see this thing at about that $41 level with, again, very light volume compared to the gap down of the 7th of January to pull the trigger on it. But you see what you're looking at. You did have one nice day on the 17th. You got about 900,000 shares, but still nothing really comparing to that 1.5 million shares of the 7th of January. I like it. I think you can make a case for a retest of the 29.26. And I'm pretty sure this is a retail mall store, isn't it? Lazard. Let's take a quick look. Just to make sure that I'm not saying one of these other ones. I think it's a retail mall store. Oh, financial advisory and asset management firm worldwide. Financial advisory segment offers various financial advisory services, mergers and acquisitions, and other strategic matters. So, yeah, I certainly would wait for a little bit more in this one to pull the trigger, especially going into a light weekend. It may even pull back a little bit more. You get one more thrust back up into that area. The volume's light. Pull the trigger there. What do we have time left for? We got, I think, maybe one time left. KKD, I wanted to take a quick look at this one. KKD, which was my introduction to stocks that had huge movements up and down. This was one that Tom O'Brien talked about very much when it was coming out, shortly after it became public. Everybody in North Carolina, where this thing was headquartered, had been selling and selling and selling. Everybody said that this was going to be basically the next CMG kind of thing. It was Chipotle. It was the Chipotle of its time. Let's put it that way. And I had one near me, and it made me fat. Their almond butter coatings was tough. Anyway, earnings were out. It has not done well. It is off 4.5%, $14.70. Look for that 1290 test coming on at you. In the meantime, so when you can, not when you have to. We'll see you here tomorrow. Same bat time, same bat channel.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.